Here's a clear comparison of two software platforms. An AI voice continues from here. Let's start directly with Simply Safe Dividends pricing, because this platform is positioned very clearly as a premium dividend research service, not a general purpose portfolio tracker. Simply Safe Dividends is priced at $39 per month, billed annually at $468 per year. There is no discounted entry plan, no flexible monthly downgrade path, and no complex tier structure to navigate. You either subscribe at the full rate or you don't. That pricing alone makes its target audience obvious. Long-term income investors who prioritize dividend safety, stability, and risk control over keeping subscription costs low. At this price point, users receive unlimited portfolios, full access to the platform's proprietary dividend safety scores, alerts for dividend increases, cuts and suspensions, and detailed income calendars with forward-looking forecasts. Simply Safe Dividends also includes analyst-written research reports, valuation charts designed to help investors avoid overpaying for yield, and financial charts with up to 10 years of historical data. Stock and closed-end fund screeners allow users to filter opportunities based on yield, dividend growth history, safety scores, valuation metrics, and income consistency. The platform's philosophy is clear. Avoiding dividend traps is more important than chasing the highest yield. Feature-wise, Simply Safe Dividends is built almost entirely around risk reduction and income durability. The dividend safety score sits at the center of the experience, combining cash flow coverage, payout ratios, earnings trends, balance sheet strength, and recession performance into a single, easy-to-understand signal. Income calendars and forward projections help investors plan cash flow months or years ahead, while real-time alerts notify users when dividend policies change. Analyst commentary adds qualitative context, explaining why a dividend may be safe or risky, rather than leaving investors to interpret raw numbers on their own. Where Simply Safe Dividends truly shines is clarity and guidance. It translates complex financial risk into actionable insights, which is especially valuable for retirees, near retirees, and conservative income investors who care more about preserving income than maximizing returns. The platform removes much of the guesswork around dividend reliability and emphasizes consistency, sustainability, and long-term income preservation. That said, the downsides are just as clear. The price is high compared to most dividend tools, especially portfolio trackers and income dashboards. There is no lightweight or budget option for casual investors, and the platform is not designed for transaction tracking, portfolio rebalancing, performance attribution, or total return analysis. Investors who want hands-on portfolio mechanics, frequent trading insights, or detailed allocation analytics will likely find the tool restrictive. The strengths of Simply Safe Dividends are its focused research, safety-first philosophy, and structured guidance. It's ideal for income-focused investors who want confidence, discipline, and professional insight built into their decision-making. The weaknesses are cost, limited portfolio mechanics, and reduced flexibility for investors who prefer a more DIY, data-driven workflow. Now, shifting to Tiller Money pricing, this platform operates on a completely different philosophy compared to Simply Safe Dividends. Tiller Money is not a dividend research service at all. It's a spreadsheet-first personal finance platform designed to automatically feed bank, brokerage, and credit account data into Google Sheets or Microsoft Excel. The pricing model is intentionally simple. Tiller offers a free 30-day trial, after which it costs $79 per year. There are no tiers, no feature ladders, no upsells, and no ads. You either subscribe annually or you don't, and you get full access from day one. This flat pricing makes Tiller easy to evaluate, especially for users who dislike monthly subscriptions and want predictable costs. At this price point, Tiller includes unlimited bank and brokerage connections, automatic daily transaction updates, customizable spreadsheet templates, and full control over how data is organized and analyzed. For investors, this means you can track dividends, cash flow, balances, and portfolio changes entirely inside spreadsheets. Unlike tools that lock you into fixed dashboards, Tiller hands you raw, structured data and lets you build exactly the reports you want. Dividend tracking is not pre-packaged in a polished interface, but it's fully possible through templates and formulas, making it powerful for spreadsheet-savvy users. Feature-wise, Tiller excels at flexibility rather than guidance. Users can customize dividend calendars, income projections, and portfolio summaries using Google Sheets or Excel. Because the data updates automatically, spreadsheets stay current without manual entry. Tiller also supports budgeting, net worth tracking, and cash flow analysis, making it a broader financial system rather than a single-purpose dividend tool. Community-built templates further expand functionality, allowing users to adapt Tiller for dividend income tracking, investment monitoring, or even advanced financial modeling. However, Tiller does not provide dividend safety scores, analyst research, valuation warnings, or alerts about dividend cuts. There is no built-in intelligence layer telling you whether a dividend is safe or risky. Everything depends on how you design your spreadsheets and interpret the data. This makes Tiller extremely powerful for advanced users, but potentially overwhelming for beginners or investors who want clear guidance rather than raw numbers. The strengths of Tiller Money are transparency, customization, and control. It's ideal for investors who already live in spreadsheets and want their financial data fully accessible, portable, and customizable. The downsides are a steeper learning curve, no opinionated dividend research, and no ready-made safety framework. Investors who want instant insights without building systems themselves may find it too hands-on. Looking at public perception, Simply Safe Dividends currently shows a Trustpilot rating around 4 stars, but based on a very small number of reviews, so it should be viewed cautiously rather than as a definitive quality signal. Tiller Money shows a 0 Trustpilot presence as well. When review counts are this small, ratings are directional at best and should not outweigh hands-on experience, feature fit, and workflow preference. Final takeaway: if your priority is protecting dividend income, avoiding dividend cuts, and relying on structured research that turns complex risk into clear, actionable signals, Simply Safe Dividends is the stronger and more conservative choice. If you prefer full control, spreadsheet-driven analysis, and a flexible system that can track dividends, cash flow, and investments exactly the way you want, with no ads and a simple annual price, Tiller Money fits a very different, power user-focused role. If this comparison helped, hit like, subscribe for more honest investing software breakdowns, and click the link below to explore the platform that actually matches how you research dividends, track income, and manage your money long term, without paying for features you won't use or tools that don't fit your workflow.